Hello, and welcome to another Consumer Credit webinar from the Financial Conduct Authority. Thank you for joining us today to hear about how we supervise firms. My name is Linda Woodall, and I'm the Director of Mortgages and Consumer Lending in the Supervision team. I'm pleased to be joined today by Denise Braga.
Hello.
And Francisco Estevez.
Hello.
Who are both managers looking after consumer credit in the FCA. As you will know, the FCA takes over regulation of consumer credit from the OFT on the 1st of April. This will involve the transfer of regulating up to 50,000 consumer credit firms, more than doubling the number of firms we currently regulate. The aim of this webinar is to provide an introduction to how we will supervise firms. I hope you'll find it helpful, particularly if you are a firm that is about to be regulated by us for the first time. And to make sure you get as much out of this session as possible, please send us any questions you may have. So let's get started. We have already recorded our answers to some of the questions you have sent to us, which we will cover shortly. We will also answer more questions during a live session, which will be shown later in the webinar. Denise, can you give us a start by providing a brief introduction to supervision?
Yes, of course, Linda. So here at the FCA, we operate a proportionate approach to supervision, and this means that a firm that operates in a higher risk category receives more intensive supervision as opposed to a firm operating in a lower risk category. We also categorise our firms into 4 broad categories, conduct categories we call these, and these are C1, 2, 3 and 4. C1 and 2 get the most intensive supervision, C4 the least. We fully expect that most consumer credit firms will fall into conduct category 4. Our supervision activity then breaks into 3 strands. The first strand is what we call our proactive strand of activity. This is where we interact with you at firm level and we assess your business to understand whether you have the interests of customers at the heart of everything you do. Where we identify problems, we will have a forward-looking approach and we will use our judgment to work with you to put things right. The second strand of activity is where we've identified a risk and where we've identified potential consumer detriment. This is usually when something has gone wrong. Where we identified issues of this kind, we work swiftly and robustly with you to put things right. Our third strand of activity is where we look across the market in a particular sector and look at risks that could impact a number of firms so we can put things right before harm occurs.
Thanks very much. Fran, can you talk through our approach to supervising consumer credit firms?
Sure. So we have already been working on for several months on making sure that we are ready for day one. So it's important that firms are also ready for day one, and day one being the 1st of April. And what that means is we expect you to not only comply with our rules, which we published a couple of weeks back, but also be complying with our principles and what that means in terms of your business specifically. So to make sure that we have everything lined up, we are already using some of our automated systems to pick up things which we may be interested in looking either just before April or from April onwards. You will also be noticing that on our website there is a guide to firms to help you get ready if you still have a little bit left to do. And we are intending on being very curious in specific areas of consumer credit. So if I can just tell you, those will be debt management and payday lending. It'll also be debt collection, pawn brokerage, credit cards and home collector credit. And we will be, from the 1st of April, visiting some of those firms just to find out a little bit more about them, to build on the knowledge that we already have from the Office of Fair Trading, but also to ask slightly more focused questions in terms of how are you adapting to the new regime and the requirements that you have to comply with. We should also, I guess, point out at this stage that we have a lot more information on our website. So if you haven't already looked at that, then please do. It is important that you are ready. And fundamentally, we will be supervising every consumer credit firm that has come across with an interim permission from the 1st of April.
Let's move on then to your questions. Darshan asked a question which is often raised, and that is, when will the FCA start to supervise consumer credit firms? Denise, can you handle that one for us?
Yes, of course. Well, we will begin to supervise consumer credit firms from day one. That means the 1st of April. There is no grace period here. In addition to our detailed conduct of business rules, firms will also need to comply with our principles for business. So I'd just like to highlight a couple of those principles to you. The first one is often referred to as our treating customers fairly principle. That's principle 6. And this is where a firm must pay due regard to the interest of consumers and treat them fairly. The second principle that I'd like to highlight today is our principle 11, which is about being open and honest with us, the regulator, and all of our principles you can find on our website and in the consumer credit welcome pack that is going to be sent to you very shortly.
Thanks, Denise. So following on from that question, Fran, can you briefly explain our approach to supervising firms with interim permission? Sure.
So I covered some of those aspects just before. So just to reiterate what Denise said and some of those key points. From the 1st of April, firms will be captured. We will be looking across all subsectors. So whenever something happens, so what we call events, then we will be notified, and there may be a case officer appointed to that case to help deal with that. But I guess just to stress, and as I'm sure you will know, the supervisory model will be proportionate, and it will also be proportionate to what permissions you are given, so whether you're a higher risk firm or a limited permissions firm. And that will very much depend and determine what you have to submit to us, how, etc. But it is very much different to what you have been used to before, and there is a lot more focus in terms of the forward-looking aspects. So how do you make money? How do you govern yourselves? What your customer experience feels like.
So firms can expect to see a lot more of us than they might have done under the previous regime, and for us to ask more intrusive questions.
Absolutely.
So, Denise, how can a firm contact Supervision?
Okay, so during the interim permission period, the first port of call, unless you are already regulated by us, will be the Customer Contact Centre. There our staff will be fully equipped to answer, I think, most of your questions. If they have access to all of the technical specialists around the FCA, so if you have a particularly difficult question, they may need to take some advice, but they will inform you of that and come back to you as soon as they can. Once you are fully authorised, we will then contact you and we will send you a welcome pack. In this welcome pack, it will actually tell you the category that you've been allocated to. So if I just flip back to the first question where I explained that we categorise all of our firms from C1 to C4, the welcome pack will actually tell you the category that you have been assigned to. As part of this discussion that we'll have with you, we will also tell you who your ongoing supervisory contact will be. Now, if you have been categorised as a C1 or C2 firm, you will have a named supervisory contact. Other firms are supervised on a flexible basis, and the contact for you for any further questions will remain the contact centre.
Okay, thanks for that. Now, Denise, another one for you. What information will a firm have to provide to Supervision?
Okay, so in terms of information, our regulatory reporting regime will not start until firms are fully authorised. The details of exactly what is in the reporting regime is on our website and is in our feedback of our consultative paper. During the interim period, however, you may have calls to change your address, your telephone number, even your firm name. When this happens, you will need to inform us immediately, and the way you will do that is you will log on to our online permission system to record the changes that you have made. Outside of that, if there is a significant change to your business model that you identify, and this could be something that you have identified that could be a serious risk to the customers that you deal with, then you will also be required to tell us about that as well. The way you do that is using our supervision notification form that also is available on our website, and a link to that will be in the pack that I referred to previously that we will be sending to you as a welcome to joining the FCA.
Thanks. Fran, one for you. Christopher asked a question about how he will be affected, and apparently he's a sole trader and introduces customers to another consumer credit company. What changes can Christopher expect?
So Christopher, it's slightly difficult to tell you exactly what this will mean for you without knowing more information about your business, what you do. So I guess my first point would be, if in doubt, look on our website, and if you still can't find anything, it may be best to seek legal advice. But from that information, it sounds very much like you're possibly conducting credit brokerage and introducing clients to lenders. That unfortunately does mean that you are considered higher risk to our objectives, and there's all the requirements and what is expected of you, it can be found on our website. You may also have to then consider whether you yourself want to be fully authorized or you would like to operate through someone else. But as I said, it's very much specific to you as a business. So if you can't find the answers that you're looking for from our website, then my recommended option would be to seek some independent legal advice.
Excellent. Now, Denise, Sonia has asked about regulatory reporting. Can you provide some examples of the type of data that will need to be submitted?
Yes, of course. So the type of data that will need to be submitted, just to remind you that regulatory reporting won't start until firms are fully authorised. All firms, regardless of size, will be required to provide us with some data. All firms will be required to provide at least details of their financial position, the number of customers they interact with, and information regarding complaints. Firms that are higher risk, such as high-risk lenders and debt management firms, will be required to provide more data. In the case of higher risk lenders, we will also be asking firms to provide us with information about the products that they're selling and the types of loans that they're selling to customers.
Thanks. So Fran, one for you. When will I know if I'm on the list to be visited by Supervision?
Good question. So I outlined that actually we have some subsectors that we're going to be focusing on even now, although the specific focus will be from the 1st of April. Those are 6, and if you are on the visit list, then you will find out roughly 6 weeks before we visit you. I should also outline that there are a number of other firms. So I mentioned before in terms of some of the cases the OFT are currently dealing with. Again, if you will be visited, you will find out. But we do have, and I think Linda's fair to say, we do have the power to visit firms unannounced. Yes, so if we do think there is anything so serious that the ongoing detriment to their customers is very high, then we do have the additional powers of visiting unannounced. But when it's a standard supervisory visit, we always try to give as much time as we can, because our intention isn't to catch firms off guard. We want to get the true picture of everything that's going on and give senior management the opportunity to prepare for those visits, to make sure they have the data and the information that we require ahead of time. So,
thank you very much. Denise, we're often asked about how we've prepared for taking over consumer credit. Can you answer this one for us?
Yes, I think I can. I've been really fortunate that I've been working on preparing FCA for consumer credit and working on our supervisory approach for around 18 months now. And before that, I have worked in supervision for a number of years. So I think I have quite a good overall experience of supervising firms across a number of sectors. As part of preparing for taking on this new area of regulation, I have also visited, along with colleagues, a number of consumer credit firms across a wide range of sectors. I've personally visited payday lenders, debt management firms, credit brokerage firms, and I've also had the opportunity to meet with a number of the trade associations. So I think overall I and my colleagues, although this doesn't start till April, we've been preparing for this for some time. And so we're really looking forward to taking on this new area, and we are also really fortunate to have a number of the OFT colleagues joining us also on the 1st of April and working alongside us in FCA.
Excellent. Right, question from Colin and Jason. And they've asked us, what happens if a firm breaks the rules? And this is one for you, Fran.
It's always something to be wary of. I guess fundamentally we don't want firms to break rules, so we want firms to be compliant, and that's why we published our final rule book. So it is out there if you want to read it. It is sizable, but it is important for you as leaders of your own firms to understand what's required of you. We also want firms to do the right thing, so sometimes that may mean that you are fully compliant, but actually you're not doing the right thing or providing the right outcomes for your customers. So you should bear that in mind. So we see everything in terms of the customer experience and what the outcomes are for those customers. So you should look at it from that angle as well. So in terms of rule breaking, as I'm sure you'll know, the FCA has much wider powers than the OFT previously had. So our evidence-based doesn't have to be as high. We have a greater appetite for taking early action, and that's particularly around firms which are doing the wrong thing for their customers, or if it's a firm that's non-compliant and it's creating customer detriment. We have the powers to appoint, for example, consultants to undertake reviews of your business. We have powers, for example, to remove senior individuals from the firms, and those can be either civil powers or criminal powers. So fundamentally what we want is firms to be compliant and do the right thing. And we know there are a lot of firms out there already who are doing this, who have complied with the OFT guidance, which has largely been converted over to FCA rules. So for those that haven't, then my appeal to you would be make sure that you understand what's required of you, so you don't fall foul from the 1st of April.
This week we announced an in-depth review on Payday and other high-cost short-term lenders. So Fran, can you give us a summary of what's going to happen next?
Sure. So it's a very important milestone that we've reached in our journey towards taking over the responsibilities for consumer credit. This week we announced the thematic review on what we broadly term to be high-cost short-term lending, so Payday specifically. And that's very much focused on looking at the treatment of customers in financial difficulty by those firms, and how do those firms then collect the outstanding balances. And we could have picked other areas. There may be other thematic reviews coming out in the near future. But we chose this one because we felt that actually when you look at the statistics, it doesn't paint a very good picture. So let me just give you that around 3.5 million loans are not repaid on time, and some of which are never repaid at all. So we think there is something going on here that we want to understand, and we want to understand particularly how payday lenders deal with those customers. So the supervision teams have been working for the past couple of months to scope this out. They will be working over the next couple of months to do the firm visits, and we look forward to publishing those results as soon as we can.
Good. So, welcome to the live session of the webinar. Thank you to everyone who has sent us a question. We're going to try and answer as many as possible. First, several of you have asked questions about firms asking about authorizations. We will hold a webinar on getting authorised by the FCA next month. But Denise, Can you give us a brief update on authorisations?
Yes, Linda. Authorisations is FCA equivalent of the OFT licensing regime. From the 1st of April, we will begin to accept applications from new consumer credit firms. Interim permission firms will receive an application set period for which they will need to make their applications to. By the end of March, we expect to publish the full details of these application set periods. And just to make you aware, we need to do this in this way because of the huge number of applications we are expecting. But if you are a firm with interim permission, we will be writing to you by the 1st of May to provide details of your application set period so you know when to apply.
Thanks, Denise. So following on from that, we've had a question from Keith, who has interim permission as an external field agent. Keith wants to know what happens next. So Denise, just to be clear, what should Keith do?
So Keith, as I've already outlined, we will be writing to you by the 1st of May, but what I would advise is that you keep a look on our website towards the end of March, because that is when we will be publishing the full details of all of our set application periods. So that, I think that would be the best thing for you to do.
And is that the place where people can find out what their authorisation status is?
That's another good question. So let me just add that, because I think there's a few people that might be wanting to know about that. So if you are a firm that has registered for interim permission, from the 1st of April onwards, we will be publishing our FCA Register that will provide full details of every firm that has an interim permission.
Thanks very much, Denise. So we've had several questions about appointed representatives and principals. Before we answer these questions, it's probably a good idea to give a short explanation of appointed representatives and principals. So Denise, could you do that for us, please?
Yes, let me try and do that. So an appointed representative is a firm that undertakes regulated activities under the supervision of another directly authorised firm. We call this supervision firm the principal firm. So this principal firm, who supervises the appointed representative, is responsible for all the activities of that appointed representative. This is because the appointed representative doesn't have any relationship with us, the FCA. For consumer credit, firms can apply to be an appointed rep for credit activities, unless of course you are a firm that is undertaking credit reference agency, or you are a lender that applies fees and charges. But just one other thing I'd like to add about this is that the appointed rep regime won't start until full authorisation. So you will have to wait until full authorisation before you can actually apply. But I would just like to add, if any of you out there is thinking of either being an appointed representative or a principal firm, I would advise that you look at our guide for being regulated and check out the FCA website, because there will be a lot more information there than what I can just cover in these few minutes. Hope that's helpful to you.
Thanks, Denise. We've just had a question live from Mr. Karim. And he asks, will a principal be responsible for compliance by the appointed representative during the interim permission period?
Well, hopefully, Mr. Karim, I've just sort of clarified that for you, because the appointed representative principal arrangement won't actually come into force during the interim permission period. You won't actually be able to have one of those arrangements until full authorisation takes place.
Thank you. So, Anne asked about what happens when a firm is already an appointed representative. Anne works for a firm that is an appointed representative already for insurance activities, which she also wants to become an appointed representative for credit broking with a different principal. She wants to know, will a multi-principal agreement be required? So Denise, over to you for that one.
Okay, so I think I'll just sort of play that back a bit. So I think this is a situation where a firm is already an appointed representative under our FSMA activities and wants to also be an appointed representative for credit-related activities. So yes, you can do that, and a multiple principal arrangement will apply. Off the top of my head, I think you might find some more information about this on page 22 of our policy statement. It just might give you a bit more detail there for you to go on.
Great. So Emily also asked a similar question, as the firm has an agreement with one principal for insurance premiums, but would like to hold a consumer credit license to sell caravans. So Denise, can you take this? I think it's in a similar vein.
Yes, I think this is really going to depend on whether the credit-related activities fall into what we call our limited permission space. So I think, from what I can gather from the question, that looks to be the case. So I think that in this particular situation, the firm could be directly regulated for their credit activities and still keep their appointed rep status for their FSMA activities.
The authorizations questions, because we realise there's a lot of firms currently out there which are slightly unsure. So I think our advice is check out the guide for firms, make sure that you understand what your responsibilities are, but also if in doubt, I guess, take legal advice. So just make sure that you fully understand what's required of you and you're ready for day one.
Okay, so let's take a live question from Bev this time, who says, we've heard that some businesses are considering splitting their businesses into regulated and non-regulated. What's the FCA view on this?
Interesting. So this is actually something that we have quite often, so it's not new to consumer credit at all. So we already have firms currently being regulated by us that have regulated parts and unregulated parts. In fact, I think I've supervised firms that are in that position. I'm sure, Denise, I think you've done the same thing. Our advice to individuals who are part of those firms is that the regulated entities need to very much be compliant with whatever rules are in place and are applicable to you, that the senior individuals within the overall firms who are responsible for those regulated activities understand really what's required of them as senior individuals and decision makers, and that we are very conscious from a supervisory perspective, and firms help to demonstrate to us where those clear dividing lines are between the regulated business and the unregulated business. So it's just making sure that that dividing line is clear to us, but it's also clear to you who are running those firms.
I would just sort of like to add something to what Fran has just said there, because I know that we have had quite a number of questions from firms asking the question around, only 5 to 10% of my business is regulated. Do I still need to comply with all of FCA rules? And the answer is yes, you do. Regardless of the amount of business that you undertake that is regulated, you will still need to comply. So I think it's sort of really, really important that we make you aware of that, and for absolute clarity.
Exactly.
Okay, so Barry asked whether there will be different compliance requirements depending on the size of the business. Fran, I think this is one for you.
Yeah, so hopefully my previous answer would have given you an indication of what we expect. I would probably very much say that the policy statement that we just published makes it clear what our requirements are, and that is then broken down into either higher risk or lower risk, and depending on what activities you do will determine what is required of you. In terms of compliance requirements, it's difficult. I would say Your compliance requirements are a decision that you need to make as a senior individual within your firm. What I would say is, from an FCA's perspective, is we do have different rule requirements for different activities. We have different rule requirements for different subsectors, and we also have different rule requirements for depending on whether you're higher risk or lower risk. So that can be, for example, what kind of approved individuals we have. It could be what data you submit, for example. So it's very much to you to make sure that you have clear in your minds what your responsibilities are. And likewise, from a supervisory perspective, we understand what those are and what you're doing in terms of your responsibilities.
And just to cover off a point about this same subject, Ron's contacted us, and he's saying, rules and regulations for small finance businesses, will these be covered in the guidebook?
Absolutely. So I would say, Ron, the first place that you should check is our guide to firms. So Denise showed what that looked like, and it's available on our website. If you can't find details there, you should have a look at our policy statement, because the answers will be there. If, again, I stress, if in doubt, then we would always recommend that you seek a legal advice, because it is very, very important that you understand what requirements and rules are applicable for your business.
Great, thanks, Fran. So again, on reporting requirements, Don's asked about our reporting requirements and visits. He wants to know what will apply from the 1st of April. Denise.
Okay, so let me try and answer that for you, Don. Our reporting requirements actually start from October 14 this year. But they come in when the firm is fully authorised. So once the firm is fully authorised, that is when you would need to start to submit regulatory data to us. Now, every firm will need to submit at least annually. Firms that are larger firms, and when I say larger, this means a firm that has 5 million turnover or more, then those firms will need to submit regulatory data more than once a year. They will need to submit it every 6 months. We will send you, once we authorise you, we will send you a welcome pack that will set out all the data reporting requirements applicable for your firm, and it's very, the reporting requirements are really linked to the activities that you do as well. So again, at the point of authorisation, we will be restating what is expected. But generally, firms, what actually happens in practice, that firms have a set reporting period, and firms have a time period from which they need to report, and that usually is in line with their accounting reference date. So that means that you're utilising all the information that you have for your business anyway.
And I guess just to add, currently, so firms already supervised by the FCA will maintain their current regulatory requirements to report data.
Yes.
So the things that, Denise, I think you talked about is only for the consumer credit aspects of their businesses. So new firms to our regulatory family will have just those. Existing firms will have an additional reporting requirement.
Yeah, and just to sort of add a bit more flavour, all firms will need to submit some data. Now, if you're a limited licence firm, a limited permission firm, then you will just be submitting a small number of data items. I think it's about 5 data items, and there's a helpful table in our policy statement that sets that out more clearly. For firms that are higher risk, then there are more requirements in terms of what you will need to provide. I think there have been a few questions about home collected credit providers. If you are a home collected credit provider, you will need to provide not only information about your financial position, but you'll need to provide transactional data, data about the loans that you have, loans that have gone into arrears. This is because we need to have a full picture of your loan book. You will also need to provide something that we call product sales data, that has more detail about the customer that you are actually lending to. But as I said earlier, our data reporting requirements come in with effect from April, so we have done it that way in order to enable firms sufficient time to prepare systems to enable you to report. But again, it is only when the firm is authorised.
And just a particular point that Oliver is asking us about to do with regulatory reporting. He's asking, will data reporting requirements be included in the current retail mediation activity return reporting system for currently authorised firms?
So I think what I'll try to answer that in a way I think that might be helpful for a wider audience as well. So if you are currently a FSMA authorised firm, and I think this firm is probably undertaking insurance mediation work, you would still report your FSMA related activities in your FSMA form, and then when the reporting rules start for your credit related activities, and this would be at the point you are authorised for credit related activities, then you would report your credit information in the new credit forms. So for a firm that is FSMA authorised, you carry on doing what you're doing.
Yeah.
Great. So Emma also asked about reporting requirements, and her firm has insurance contracts which are consumer credit agreements. The firm already has to send data on its income to the FCA, and Emma wants to know whether the firm has to send the income information twice to the FCA when we take over consumer credit. I think this is a variation of your previous answer, but so. Anything you want to add?
Yeah. Well, I think my previous answer did sort of touch on that, and but just to sort of make it absolutely clear, Emma, no, we don't want this twice. You insert your insurance information on your RMAR form, and then the credit information will follow on when you are fully authorised. So I hope that covers that off.
Great. So Sharon asked about what are the important dates and times relating to reporting information. She asked particularly about when a firm is a subsidiary of a group. Denise, any particular points there?
Yeah, I think the key thing to highlight here is that when a firm makes its application for authorisation, as part of the application process, and I think it's definitely within the application form, we ask the firm for its financial reference date material, and that is at the point, that is where the firm should insert that, and that provides us with the information. I think generally firms provide their statutory end date as the date that they submit to us.
Thank you very much. Another question on reporting, this time from Richard. He wants clarity on the timing of our requirement for firms to send in data on complaints. Is it when a firm is authorised or the 1st of October? So Denise.
Right, with effect from the 1st of April, all firms must have processes and procedures in place to record complaints. So just to be clear, this starts from the 1st of April. However, you will only need to submit this as regulatory data to us when the firm is authorised.
Great. So Steve, this time, asked us to clarify the position on consumer credit complaint reporting after 1st of April. Steve said the firm is already regulated for insurance intermediation and sends the FCA complaints data. Does the firm need to report or publish this information? Denise, this may be similar to the answer you've just given.
Yeah. So the key thing is don't do anything different for your FSMA activities. Your current regulation, you need to continue to record and submit data for your FSMA activities. The data regarding your credit activities will only apply, apart from you recording complaints, when you become fully authorised.
Great. So now let's think about the transition period. Marketa asked about the transition period. We've already discussed this, but can we provide more detail on how we will supervise firms during this period. Fran, can you answer this one?
Sure. So as you mentioned, we have already covered some of the aspects early in the session in the webinar, so hopefully that should have answered some of your initial questions. But just to reiterate, so we're very much focused on the 1st of April and what goes on, and there is different requirements in terms of what we will be doing from the 1st of April during the transition period. So we'll be looking, and have already said publicly, at the payday lending market, so through a thematic review, and that's very much focused on the treatment of customers who are in financial difficulties. We are also going to be looking proactively at 6 key areas or key subsectors, and we'll be paying visits to a number of firms within those over a rolling period, and that's very much designed to familiarise ourselves with the newer firms, but also to make sure that we get a fuller understanding of what's going on and how do they make money, what type of customers do they have, etc. And we're also taking forward a number of cases which are already or still being worked on at the OFT. And likewise, we will be taking forward cases that start on the 1st of April. So that could be driven through whistleblowing intelligence, it could be driven through consumer complaints, it could be driven through a number of different areas. And firms which are under investigation will be contacted in due course. I guess I should mention also at this point that our model is somewhat different to the OFT model insofar as we are a lot more forward-looking, and we are also trying to understand really the business models of firms and how do they make money. In terms of the firms, so I guess I should mention at this stage also that they can contact us. And the contact centre is the best place to do that. So that is based here in London, and they have been trained over a number of months to be ready to answer questions on firms across all sectors and different business models for consumer credit firms. So the number is on our website. So if in doubt, you can give them a call. But we are open, and we'll be contacting those firms that are in scope of any of our visits very shortly.
But key point is we'll be regulating from day one.
Exactly.
So moving on then, Michael from a motor finance company asked about legal documents produced in the final days of March and early April. He's asked whether the original documents will be accepted as fully enforceable. Fran?
So that's quite a technical question, but we'll try and give you some detail and hopefully you'll find this helpful. So we've had a number of these questions coming into us, particularly since the policy statement has been published. This will affect the pre-contractual information, but also the credit agreements. The main points are that you need to be ready for day one, and that means that your contracts and any associated information that you need to give to your customers needs to be ready. There is a Treasury order which allows you to reference the FCA as the supervisory authority a couple of days before the 1st of April and a couple of days after, so that the OFT can be included in both. But the key message is that you need to make sure that the FCA is on all the relevant contractual information to make sure that those agreements are legally enforceable. We will be assessing cases from 1st of April on a case-by-case basis. The key message to this is make sure that you are ready and make sure that you know what's required of you before the 1st of April.
Great, thank you. Now let's tackle the thorny subject of enforcement. Carl has asked whether there are significant changes planned to address enforcement of consumer credit laws. Fran, can you cover this one, please?
Sure. So, Carl, hopefully the answers that I gave earlier in the webinar should have helped with some of this in terms of rule breaking, etc. Just to reiterate some of those main points is that we are very much focused on a wider range of powers than the OFT has previously had. So you should notice a difference in approach to that otherwise taken by the OFT. Some of these powers are public, others are not. but they are all designed to make sure that firms are compliant and firms do the right thing for their customers. So if you are already compliant and you are already doing the right thing for your customers, then hopefully you should never feel or be on the receiving end of any of those powers. And we already know there are a number of firms that are compliant and doing the right thing. Our main aim is obviously ensuring that the markets that we regulate work well and the consumers within those markets are protected. And we are very much focused from the 1st of April of delivering on that mandate. So hopefully the wider suite of powers and combined with our supervisory effort should go some way to help that.
Thank you so much. Now Fraser has a question for us. And he asks, how will you ensure that firms who have not applied for interim permission do not trade illegally? Is there scope for the FCA to take action against those who are and have not registered with us?
Yeah, absolutely. So Fraser, you touch on a very good point. And I guess I'll cover it in two aspects. So there will be some firms that simply don't know they need a license from us or a license from the OFT, and then they need to obtain an interim permission and be fully authorized. We are already trying to attempt to contact those firms as far as we can to make sure that they know that they should be applying and be fully authorized at the end. But there may also be some firms that simply don't want to continue some activity or didn't get round to making sure they have an interim permissions. So we have a full department that is solely dedicated to looking at unauthorized activity. It is a significant problem, and as you mentioned, it is also illegal to conduct any regulated activity from on the consumer credit space from the 1st of April without either an interim permission or being fully authorized. So I mentioned earlier that we need to make sure that we deliver our remit on consumer protection and market integrity. So we will be quite tough on firms that are operating outside of their legal scope.
And I guess the key thing to remind everyone about is from the 1st of April, we will have the FCA Register that will have the full details of all of the firms that have got interim permission.
Exactly. So consumers will be able to look and be able to make it more informed decisions in terms of the firms that they are dealing with, and you'll be able to see which ones have interim permissions and are fully authorised and which ones are trading illegally.
And clearly those are the firms we would recommend consumers deal with.
Absolutely. And I guess if there are consumers out there listening to this, then do call up our contact centre. So we do have a consumer helpline, and if you do spot firms which are operating illegally without the required licence, then please let us know. So we welcome that information.
Okay, so we've had a question from David about OFT notices of non-compliance issued to firms. David asked if these will be made public before the 1st of April. Fran, I think that's another one for you.
Yes, I'm getting them all today. So yes, the OFT already publishes decisions to revoke or refuse licenses on their website. These will continue to be published until the 31st of March, and that register will continue to be live beyond the 1st of April. And from the 1st of April, obviously, they will be published on our register and associated to the relevant firms. So there shouldn't be anything slipping through the cracks. And firms and anyone in the public will be able to view this information because it's publicly available. So.
Great. So now on to financial promotions, and a really interesting question from Sophie about this particular subject. Can we explain how we will supervise financial promotions? Sophie has asked particularly about this subject, and particularly where they're made over the phone, and approving the script that sales staff use. Fran or Denise, perhaps you've got some information you can share on this one.
Sure, I can try, and Denise, if you have anything. So Sophie, it's quite detailed, some of the questions, but I guess I can just broaden that out a little bit in terms of financial promotions to us are very important, and they are naturally important because that's one of the main routes in to attract prospective customers. So our overarching message is that all promotions need to be clear, fair and not misleading. What that means in practice is covered by our rules, so if in doubt, have a look at our policy statement to make sure that you fully understand what that means for you in your own business. In terms of the specifics, I think what you mentioned is what we call interactive promotion. So that is when the promotion is made either over the phone or face-to-face. There are different rules requiring setting the standards for interactive promotions versus non-interactive promotions. So unauthorized businesses cannot make interactive promotions, so that's the first point. So they can, subject to the approval of an authorized or regulated firm, make non-interactive promotions, so that's newspaper, adverts, etc. But the key point here is that there always needs to be an authorized business approving those if the unauthorized business are the ones publishing. In relation to sales scripts, then it's obviously your responsibility to make sure that they meet our promotions and our rules, and I would appeal to you to make sure that you understand what that means before the 1st of April.
So Bev has another question in this space. And she says, you mentioned you will use an automated system to identify what we look at. Can you expand on this, Fran?
Sure. So Bev, we have a pretty sophisticated computer system here in London, which in effect scans the market for any type of promotions. So that includes newspaper promotions, it includes radio adverts, it includes television adverts. It also includes intelligence-based adverts. So we at the FCA are all consumers, and we are all receiving different types of promotions. On the tube, for example, we will see different types of adverts, and likewise consumers volunteer some of those to us. And so all that is fed through this automated system, and we have case officers which are looking to assess each individual promotion to make sure that they are compliant and they are clear, fair and not misleading. So it is important, as I stressed earlier, to make sure that you know what the requirements are for those promotions, because the consequences of not being compliant aren't great for firms.
And just to add, here at the FCA we do have a dedicated team that deals specifically with financial promotions. So just to reiterate what Fran is saying there, it's extremely important that you make yourself aware of what is required.
Because we can require them to be withdrawn at the end of the day.
And we can ban promotions as well.
Absolutely.
So.
And to make sure that we are ready for the 1st of April, we have already been running searches. So we already know how firms are adapting, we can see progress, and we can see which firms are still putting out promotions which in effect from the 1st of April will be non-compliant.
Okay, so we're coming to the end of our webinar, and I want to thank you all for watching and sending in questions to the supervision team. If we haven't answered your question, we'll send you details on where you can find further material on the FCA website to help answer any residual questions you may still have. The FCA plans to hold other webinars and events, including one on authorization next month. So do sign up for our email updates so that we can send news and further information about consumer credit. So on behalf of the supervision team, thank you very much for your time, and goodbye from all of us.
Goodbye.
Bye.